Everything is up for the day on Friday. Thanks for being with us. We've got a great comprehensive review and forecast for you. We're going to jump into these charts and run everything down. We see the S&P 500 up for the day, 1.10%, another big green up candle, showing again the magic of the weekly vertical crossover. We had one all the way back. It's now back a full 3 weeks ago, ending Friday the 25th. All our weekly candles always end on Friday because they're weekly candles. They represent 5 days of movement. That was Friday the 25th of January when we first started, and we have seen incredible price growth over these last 3 weeks. Things have just been going gangbusters. Derivative oscillator spiking up, price percent oscillator spiking up. Also, that is our main indicator. We go from the weekly to the 2-day. And of course, we see another strong 2-day candle. In fact, the derivative oscillator gaining some momentum. And we see, of course, things spiking up on the price percent oscillator. Now, this is just the first day of the latest 2-day candle, so it hasn't drawn yet. It's not complete, but it's looking nice so far. And of course, we go from the 2-day to the 4-hour. We see lots of movement up in the morning with some more movement up in the afternoon on Friday. Derivative oscillator gaining upward momentum. And of course, that price percent oscillator bouncing off the red signal line and moving back up again. So again, we just keep seeing nice movement. Those of you who keep getting sort of pulled this way and the other when you see the 4-hour crossover, use it as a jumping in point and then get in and out based on the 4-hour chart. Remember, once you jump into that move, let the bigger charts lead you on how long to stay. Of course, all the charts all the time, but it is the kind of thing you need to practice. And what do we keep encouraging you to do? That is fill out the trade worksheet every time you open a trade. That's what I do. Every time you do a practice trade, you use the trade worksheet. You can find them in the show notes, available for free if you're not a subscriber to our daily market and our once-a-week comprehensive review and forecast. Daily market podcast comes out every day. The videos do too. Subscribe to the videos at chartingwealth.com. You will see in the show notes you get every day the worksheet for all of your trades, which has entry price, time, date, reason for entry, notes during the trade, which include the dates, the candlesticks, the indicators, the trend lines, what you're thinking throughout the course of the trade. Then your exit price, time and date, reason for the exit, your profit loss, time in the trade, and then the biggest thing, the lessons you learned from doing this. If you want to hyper accelerate your training, you do that. If you got more time, of course, the comprehensive review, you listen to that every week and fill out your weekly worksheet, your weekly market worksheet. Then if you've got time to be able to absolutely get involved, if you're really interested in that, fill out the daily market worksheet. All those are available for free, and we also have bound 3-month copies available for purchase. You can see the link to that in the show notes, as well as purchasing our book, as well as being a Patreon supporter where you get all sorts of great stuff, including reviews once a month of your favorite stocks or ETFs you'd like us to look at. We take a select number of those, and then we have a call-in for our members. So think about being a Patreon supporter. If you haven't purchased the book, you got to get that first. And you'll see links in the show notes. So things are looking nice on continued up movement in the stock market. We go from the weekly on the S&P 500 to the weekly on the NASDAQ 100. And again, another nice strong week of up movement since that weekly vertical crossover happened at the same time as the S&P 500 on the week ending the 25th of January. And again, nice strong up movement, derivative oscillator gaining upward momentum, price percent oscillator spiking up. We go to the 2-day chart. What do we see there? We see continued up movement well above the 2-day and the weekly trend line. Derivative oscillator losing a little bit of momentum on this first day of this latest, and the price percent oscillator moving over a little bit, not going up as strongly as it had been. So little cautionary note there. We look, and that's where we really see it on the 4-hour chart. The blue price percent oscillator is below the red signal line technically. I know they're real close. They were laminated at one point, but we see some weakness. We saw some strong up movement in the morning, bit of a pullback in the afternoon. Price movement still well above the 2-day and the weekly. Derivative oscillator did gain some momentum, but that price percent oscillator a little bit bothersome, so just keep an eye on things if you have stayed in this trade through thick and thin after we had a jumping in point following the weekly vertical crossover back on the 25th of January. So we're continuing to watch, monitor, see what we can see, learn what we can learn. We go now to bonds, up 0.16%. That is for the day, and a nice green up candle, no wick on the bottom. But again, when we look at the wick on top, didn't reach as high as the high in the prior week on our Heikin Ashi candlesticks. And we see a little bit of a pullback as far as the angle that the price percent oscillator was going up, derivative oscillator continuing to lose momentum on the weekly chart. And of course, we look at the weekly still in a confirmed up move, and that 2-day chart still in a confirmed down move, even though we see 2.5 days ago, no, 3 days ago, where we saw the derivative oscillator flip over to positive. The price percent oscillator still negative. Looks like a green candle's trying to form not too big a one. This is just the first day of that latest 2-day candle. We go to the 4-hour chart at the end of the day, trying to cross over going up. But again, we look back to the morning of Thursday the 14th, and we've not even gotten that high on Friday. So again, with the 2-day down, the weekly up, we don't have a trade. We're just waiting to see how bonds shake out at this point. We'll continue to watch that over the course of the next week. Lastly, we go to gold, up 0.60%, the biggest, again, of the 4 ETFs that we track. It's up the most for the day. But what do we see happening in gold? When you first look at the last 3 weeks, you can see that gold's really topped. It actually topped all the way back on the week ending Friday the 1st of February, and it's been sliding sideways since then. You can see that in the derivative oscillator losing momentum. Price percent oscillator still heading up. But again, price movement is well above the weekly trend line. And again, just sort of seeing where gold is going to go. Is it just, trying to just sort of digest previous gains and then head back up again strong? Don't know yet, because the 2-day chart's still negative. Derivative oscillator is losing a little bit of its downward momentum on Friday, the first day of the latest one. But we see the price percent oscillator moving pretty parallel. Do have a nice green up candle for this latest 2-day, but not enough power to rotate our main indicator, that price percent oscillator over. So we'll continue to watch. Remember, we see that things are still in a confirmed down move on the 2-day chart for gold, and that means we don't have a trade. It's moving in opposition to the weekly, which is up. But we did see at the end of the day, the 4-hour did cross over going up. So again, we'll wait and see. Still not anywhere near where it topped out back on January the 31st in the morning. That's the highest gold has been lately. So we'll continue to watch and see if maybe gold is gaining some of that upward luster again. We'll watch that over the course of this next week. So to wrap things up, those of you who are still in S&P or QQQ, NASDAQ 100, practice trades, continue to watch those, particularly the NASDAQ 100, very closely. And we're waiting for bonds and gold to settle out and let us know which direction they are moving in. Purchase the book. We're in our 8th printing and getting low on those copies. Still have some left for you. If you've not purchased the book, you need to do so. And we've also got great training at the end of this video. If you're not a subscriber, subscribe. That is for free at chartingwealth.com. And you get all those great things like the PDFs to the daily market worksheet, weekly market worksheet, trade worksheet, plus all sorts of other great things. A discount if you decide to go with the paid version of freestockcharts.com, which is TC2000. That's what we use every day, my friends. God bless. All the best from the whole team here at Charting Wealth World Headquarters.